hear us, let me know out there. If you guys can text in the chat box and let us know that you guys hear us, then we'll get the party started. All right. And then, like always, you guys know that text in the chat box and let us know that you guys hear us, then we'll get the party started. Okay. All right. And then all right, so let me know if you guys hear us, guys.
Hello, hello.
All right. So right. Okay. All right. All right. Everyone can hear us now, JB. So you want to go ahead and take over?
Yes, perfect. Hello, everyone. And this is JB Trader. And I just want to welcome my two guests today. I'm from Southern California. And today we have Ty Zen and we have Eric Gerber, both very experienced traders. And they've been trading cryptocurrency in addition to trading traditional assets for over 4 years now. And I'm going to ask them some questions and gain some information, valuable insights, being an experienced trader. What's up, Ty and Eric?
Hey, what's up? What's up? You know, I'm really happy to be here with you today, JB, you know, to talk about the differences between the traditional trading and versus the crypto trading.
How you doing, JB? Likewise, excited to be here.
Now, I've known these guys for quite a long time. We both have similar backgrounds as far as trading mentors. So I'm familiar with their trading styles and strategies and our overall, you know, just philosophy on trading and risk management. So, Ty, can you give us some background on yourself when you first started trading and, you know, how did you process through that to become profitable?
Yeah, so like you mentioned earlier, you know, so we all got, you know, trained by the similar groups of people to learn how to trade and everything, JB. And over 4.5 years ago, I was working at a energy brokerage firm, and they were mining Bitcoins there. So they had a Bitcoin mining, you know, processing plant there, and they were doing that. And that's how I learned about Bitcoins, and that's how I got into it. When I saw how fast that Bitcoin can transfer, clear, and settle almost instantly at near zero cost back then, you know, I said, this is going to change Wall Street. And, you know, because you know how like when you and I were trading before, when we use like TD Ameritrade or Interactive Brokers or TradeStation like that, after we make some profits and we need to transfer those profits to our bank account and use it, it would take like anywhere between, you know, a week. Like usually for me, it would took like around 2 weeks, right? So because of that, when I saw how fast that they clear and settle with Bitcoin, I couldn't believe how fast it can settle instantly, almost instantly back then. You know, now there's a civil war going on in Bitcoin, so it's taking forever for transactions to clear because both sides are trying to spam each other or whatever it is that they're doing, you know. But that's how I got into Bitcoin trading. I got back into it back then, and most exchanges that I was using back then have all been hacked and they're all out of business now. So, so that was the risk that I took, you know, over 4.5 years ago.
Awesome. What about you, Eric? How'd you start crypto trading?
Well, I had this crazy Asian friend that kept telling me about Bitcoin. That would be Ty. So I was out of the country, and I was already trading for several years on my own, trading mostly securities and getting into currencies. So then he started telling me about, hey, there's this Bitcoin stuff going on. He's looking into it, and then they had gotten started, and I came back to the country, back to the good old US of A, back to the country of Texas, and so I got involved. I saw when I actually started digging my hands into it, it was right after its very first run up, the first time when it went up to 1100 something. And so I took a look at it, and I started reading up on it, and I'm not an extremely technical guy, so I can't read all the programmer stuff, but I could see the value in it. I could see the dry land through muddy waters, as they say. So I jumped in, and I basically bought it from the top all the way down. because
Right.
from my perspective, it was still worth it. I wasn't playing a short-term game. I wasn't taking the same approach with this that I was taking with traditional trading strategies, because I saw
Right.
a long-term value and a long-term result. So yeah, so I continued accumulating all the way down to $200. Stacking up, and then got into some of the very first other cryptocurrencies that were getting put out there, like Ethereum. And all said and done, it's something that has made a difference in my life, and I'm happy to be here to share it with you guys.
Just real quick, I just want to jump in. I have a couple of people in the audience saying that they can't hear us. Can you guys put yes in the chat box if you guys can hear us? Just real quick, just to confirm that everyone can hear us. All right. All right. Yeah, we got confirmation. I guess it was just one person that could not hear us. All right. Sorry about that interruption, JB.
Oh, no worries. So Ty, so you brought Eric in, and I know that you definitely influenced my husband, myself, and a lot of my friends. So is it part of your passion to really share trading cryptocurrency and making that switch over as a trader and investor with your family, friends, everybody you know?
Yeah, there's $4 billion that just came into the cryptocurrency space, the blockchain space in 2017, and that's well documented. There's several places you can go look at those numbers, right? So it's not numbers that I made up. That's what's the money that's been flowing into it, right? And there's just not enough traders. There's not enough talent. There's not enough people in this industry because it's so new, right? This is the first time in hundreds of years that the human beings have come up with an entirely new asset class. Before we had like gold, precious metals like gold and silver, and then we had like stocks, and then we had bonds, and then we had futures, and then we had oil and things like that. But this is the first time that we have a digital asset, something that's electronic, that has value, that we can transfer between one human being to another. So it's very revolutionary that this technology or this product or whatever you want to call it, right, has been invented. And so that's I've been trying to drag people kicking and screaming. I would have to say that Eric is probably the only guy that one of my friends that did not kick and scream when I was trying to grab him by the throat and drag him into the blockchain world. He was like, all right, man, if that's where you want to go. And he and I, he trusts me. I've told him about stocks before he got into it. So that's how we all started learning how to trade stocks and everything at the same time. So he came from a trading background already. So, and he knew that I was not going to bullshit him about something like that. I wouldn't be wasting my time if it didn't have real value. So, but everybody else was kicking and screaming. And some of them are still kicking and screaming, and this time though, the difference is that they're kicking and screaming that they didn't get in 4 years ago when I was telling them, back then.
That's true. I can attest to that.
Yeah. But the good news is this, JB, the good news is that, it's still early. I believe it's still early. We got a good 3 to 5 year run on this. And, Eric and I are both, grateful that we're in a financial position where, finances is not an issue in our lives anymore. And we want to be able to share that, we struggle and worked our ass off throughout our lives to get to where we're at today. And there's an opportunity here, we believe, that can help lots of families, change their financial position. I cannot speak for Eric, but I know that, thanks to what the trading that I've done in Bitcoins and cryptocurrencies, I know that, unless, I have just a dumbass kid or something in a future generation, my kids and my grandkids should be, well off, for a few generations there. I know that somewhere along the line, there's going to be some dumbass that's going to come along and just ruin everything for everybody. But at this moment, I'm confident that at least it'll go for, 1 or 2 generations.
All you have to do is not make any bonehead moves.
Yeah, exactly. If you get into the cryptocurrency space, I'm glad Eric brought that up, because, we don't, as long as you don't do something stupid, you should be good to go.
What are the top stupid things? What are the top bonehead things, Eric? And have you made all of them?
Oh, well.
Dozens of times.
Investing in something that you don't know. So like you're going to have a mix of that. If you're not a programmer, if you're not an app developer, then you're going to have a level of not understanding certain things. Do you know how to take apart and reassemble and build a transmission in your vehicle that you drive around every day? Most people, the answer of us is no. The answer to that is no for most of us. We don't need to understand how to rebuild the transmission or how all those components work to be able to drive a vehicle. And these investment assets are similar, but that doesn't mean that you don't need to know how to be safe. You don't need to know how to take care and manage your investment properly. These digital assets are such a thing where you have a lot of responsibility and you have a lot of ability to have control over them. And if you are leaving that for someone else, then it's shame on you. You're basically leaving things on the table for other people. Bonehead mistakes. Sending things to the wrong addresses is something that we've all done. Small increments and large increments. Sending things to the wrong addresses is terrible. You have to get some good security habits of doing a verification transaction before you do a larger amount. If you've ever done something where you lose $10,000 or $20,000 or more, then you're smacking yourself in the face. Yeah, just simple things, or investing in something like that doesn't have a team or doesn't have a product that they say they're going to have. So what ends up, you tie up all your capital, you tie up your stuff, and it's just stuck somewhere in something that none of the exchanges pick up. It's not tradable to anyone anywhere.
Right.
And you have this anticipation that it's going to be worth something in the future. You just bought yourself a lump of coal and you hope it's going to one day turn into a diamond. And just like with all startups, startup businesses have a very, very high failure rate, and in the tech industry especially. So we are dealing with tech industry stuff, and now everybody's flooding in with all their startups. So just because you throw money at everything and just because it's out there and everybody can get it for their projects does not make it a good investment. So there are some things that you do have to be careful for. So those are my two. Just throwing money at something that you're not aware of how much is going to come back to you. You don't have a clear set of parameters to operate on. And that's one thing that we did over time. We made all the mistakes and we developed the system so that way we can avoid making those mistakes in the future.
Right.
Then the second one is just small things, leaving things not secure and leaving things like sending stuff to the wrong address, not going through all of your redundant procedures to make sure that everything is safe.
Yeah, that's true. And to be honest with you, I was one of those kicking and screaming people. And then when I did start to get into it, I kind of get hung up on the technology too much and trying to understand everything about mining and understand everything about the technology, which prevented me from really taking those shortcut steps to just, do your fundamental basics and then just start trading and use traditional technical analysis. So Ty, for you, trading, are you doing mostly long-term, or are you applying some of your same strategies that you use for futures, options, stocks with cryptocurrency as well?
Hey, that's a really good question. When I was trading the stocks and the futures and the Forex market, I think the last I checked, I was averaging over 3,000 trades a year in those markets, right? And there's a huge, which means that I was actively trading quite a bit, every day, every week. And what happens is in the traditional markets, right? You can trade and you can get in and out because you're using margin, which means that in case your listeners are not aware, in the traditional markets, if you want to control $100,000 worth of stocks, you have to put up what they call is 4-to-1 margin, right? So if I want to control $100,000 worth of stocks, I have to put up $25,000 of my own money to control that position or that amount of stocks. And then in the futures market, it's 1-to-12 or 1-to-20. It depends upon which broker that you use. And then in the Forex market, for every $100,000 that I want to control, I put up 1/50th of it, which is about $2,000. In the cryptocurrency world, it's everything is traded pretty much one-on-one. So whenever someone comes in to the cryptocurrency world, there's not really a margin. I do not recommend using margin whatsoever in the cryptocurrency space because you will get slaughtered. Slaughtered. It's almost, there's not too many guarantees in life, but if you use margin and then you also short on margin, that is a recipe for disaster, right? I would, out of those 3,000 something trades that I would make in a year in the traditional world, I mean, the majority of them were shorts. And so what you asked earlier, what were some of the mistakes that I made when I got into the crypto space? I thought, well, I'm going to come in here. I'm going to short the crap out of this. It's running up, Bitcoin's running up to $1,000 and everything. And man, I got slaughtered. First of all, there's no margin in crypto trading, right? At least at the reputable exchanges, right? Starting in 2017 and moving forward, we're going to start having some margin. But I'm if you're listening to this, if your viewers are listening to this, JB, I do not recommend using margin in crypto. And the reason for that is because in the traditional world, if you are trying to short oil or gold or silver or Apple stocks or something, you actually borrow that product from someone else at the exchange and then you sell it. Whereas for example, if you short oil, you're borrowing someone else's oil to sell it. If you're shorting Apple stocks, you're borrowing stocks from someone else and you're selling it on the market. Whereas when you try to short Ethereum, or you're trying to short Monero, or you're trying to short Zcash or something, right? What happens is you have to go borrow somebody else's Bitcoins. You're not borrowing Monero to short Monero. You're borrowing Bitcoins to buy Moneros to sell it on the market. And guess what happens while you're waiting for those Moneros to drop in price, and the price of Bitcoin happens to shoot up from 15,000 to 20,000. So you're incurring two risks. You're taking the risk that your Monero that you just shorted, you hope that it doesn't go up, and then the Bitcoins that you just borrowed, you hope that doesn't go up either. So it's like a double whammy. And the first time it happened, I was like, what the hell just happened? Like, I just shorted this, right? And it made money on the short, like the position, the currency that I was shorting went down in my favor, but I'm losing money. The profit and loss shows that I'm losing money, and a crap load of money. And I'm like, what the hell's going on? Like, I've never seen it where I short something, right? And the price falls and I'm losing money. And I look over and the margin, the lending, a window, it shows that the price of Bitcoin had skyrocketed. That's why the cryptocurrency I was shorting was going down and Bitcoin was going up. And right. I was sitting there, I was frozen like a deer in headlights. I was like, what the hell's going on here? I'm an experienced trader. What the hell's going on? And it took me, you already know me, JB. You know how stubborn I can be sometimes,
A little bit.
Whenever I don't know what's going on, my dumb ass, what do? I do the exact same mistake again to try to figure out what just happened. And then I lost money again, shorting it again. And I didn't realize what just happened. And then I shorted it again. And then it lost. And I still couldn't figure out what the hell just happened, right? Like, why is it that the price is falling?
You didn't look into it at all, or?
No. So I called up my buddy Leon and I said, hey, man, I just shorted so-and-so. The price went in my favor and I just got slaughtered. And he goes, did it go in your favor? And I go, yeah. And he goes, how did you short it? I said, I went and borrowed some Bitcoins, and then I bought some of this, and I sold it, and that's how I shorted it. And he goes, you idiot. Bitcoin was going up. So I was borrowing for example, I was borrowing the Bitcoins at 1,000, and it was going up to like $1,200, $1,300, $1,500, $1,600. And now I might have made like $100 on my short position, but wow. Bitcoins that I just borrowed went up $500. So I'm down like 400 and stuff. So that's one of the bonehead lessons that I had to learn. And after Leon told me, if anybody's been around me for a while, you guys know that I have to make the same knucklehead mistake multiple times before it goes through this thick skull. So I had to go, even though he told me not to short anything and borrow any coins, do anything on margin, I went and did it again another, bunch of times, and got slapped around some more before I realized, hey, this does not work. So that's why I'm telling you guys, if you're new to the crypto trading, do not use margin, do not short, only go long.
What do you think about that, Eric? Did you go through that as well? Or did you learn from Ty's mistake?
No, I did learn from Ty's mistake, but I did not go through it simply because I never felt comfortable with the lending. And as things progressed, it it proved a few other things to me, because the trading that we do in crypto is not the same as the trading that we do in the traditional markets. In the traditional markets, we're trying to capture a small percentage, right? We're trying to get a percentage of each move. We're trying to get little pieces. I call them crumbs. You're trying to catch some leftover little crumbs, right, when you make a trade. And that's not what we're doing in crypto. We're trying to make life-changing finances. We're trying to make difference here. And if you have an ideal short scenario, the ideal short scenario goes from 100% to 0. It drops down. So 100% is the most you can possibly get on a perfect scenario, even though we know that it's really ever going to go to perfect 0, right? So what is the profit potential on any given short trade in crypto, and what is the profit potential on any given crypto? So the most you will ever possibly get on a short trade is 1x, 1 times your money on a short trade. And on the other side, you're getting 1, 2, 10, 50, 100, 1,000 times return on your money. So it didn't make sense to me to get on the side of the market, because on the traditional side of the market, it's not quite even Steven, right? There's a little bit more fear in the markets than there is greed, and it drops faster. It's easier to make money on the short side of the market. In my experience, I loved short trading, but then in the cryptocurrency, it didn't seem like the whole risk reward was even Steven when you're talking about going long or going short for me. So that was my emotional decision for never making those mistakes.
And now, do you learn best like from books or websites, or reading articles, or do you need that personable instruction, or do you need trial and error like Ty likes to do?
Well, I don't know if you're asking Eric or me, but I'll answer. If I would say that the best way to learn trading is just like learning traditional trading, is learning from somebody that's actually been through the battlefields, through the landmines and the minefields, and learn from them. You know what I'm saying? So that's where I would say is the best people to learn from, because those are the ones that have. This is a completely new market, and I was really shocked that I was I guess you can say that I was kind of overconfident when I came into the cryptocurrency market. I thought that, hey, since I have a background in trading already, this should not be a problem for me to learn how to trade Bitcoin and crypto. But I still had to go through a learning curve there. So I would say that the best way to learn crypto is to find somebody that understands this and knows how to do it. I hate to. So in the traditional stock market, in the traditional trading world, you can actually learn from someone that's only made $10, $20, $50, $100,000 in their trading career. You can actually learn from somebody like that, because I've learned from many guys that have that only make like $50,000 or $100,000 a year. I've met some really good traders that trade currencies. They just have a smaller portfolio that they're trading with, and they have to live off of pay their expenses and the bills from that portfolio. So they grow their portfolio a little bit slower because they're consuming some of their profits. If you are learning how to trade crypto in the crypto land, in the blockchain space, I would say that if the guy that you're learning it from is not a multimillionaire, I would not waste time learning it from him. I mean, I'm not knocking any of the guys that are new to the space, but if you haven't been through a bull market, a bear market, a bull market, bear market, a few bull bear cycles, a few market cycles, then I would not be confident in learning how to trade from that person. And the other thing too is that unlike the stock market, right, like Eric was mentioning earlier, I want to echo what he said. He said that in the traditional stock market, we were used to taking profits. Like if we get into an Apple stock with 1,000 shares and it goes up, 10 cents, or it goes up 50 cents, or it goes up $1 or $2, we would take profits on it, right? And then we might leave a little bit behind, but we would take a big chunk of the profits off the table first, right? And that was some of the mistakes that Eric and I made early on as we got into crypto, is that things move so fast and so crazy. I mean, like, one of our colleagues, he got into a Litecoin trade early on back in, I think it was 2013, where it was either 2013 or 2014. He got in with a $5,000 trade in Litecoin, and it went to $250,000 in just like a couple of weeks, just a few weeks, just really short period of time, right? And because of that, we were shocked. We didn't know what to do. Like, are we supposed to take profits on this? Do we let it go back, or do we write it out some more? Is this even real? Did this $5,000 just turn into $250,000? Right? If you're a traditional stock, futures, or forex trader, you know, it doesn't. Even if you trade the futures and the forex market, which is extremely volatile in traditional markets, that's going to be considered extremely slow or low volatility in the crypto market. So one of the things that when Eric said that, you know, we in the crypto world, we don't calculate things based on how many ticks did we gain, or how many cents did we gain, or how many points did we gain, like in the futures market. It's more of how many X's. And what we mean by that is that if you made a 100% profit on your money, if you put up $1,000 and you made $1,000 profit off of that, then that would be called a 1X, which means 1 times your money. If you made 1,000% profit on that trade, that would be considered a 10X. And a 100X would be something that's 100 times your money, and that's like 10,000% profit. You know, sometimes these numbers, I get them wrong sometimes, simply because the profit, the rewards are so high that sometimes I have to use a calculator to figure out how many thousands of percent that it just went up. Right? So that's something that we were not accustomed to in the forex market or in the stock or futures market. So when we came into some of the early mistakes we made, we could have made more money today if we had known that there was this type of volatility in the markets, right? And so when you ask me who would you learn from, or what's the best way to learn, I would say that if I was talking to someone that was going to, I was going to learn trading from someone on how to trade crypto. If they've been trading for over, let's just say they've been trading, you know, for over 4 years. If they haven't made like $5, $10, $20 million, you know, I probably would not listen to them.
Interesting.
Yeah.
Good.
So.
Yeah. So what do you, you guys, what do you think about the link? So like you said, as opposed to trading traditional futures and cryptocurrency, now we have Bitcoin futures. So when this, you know, type merges, where you have an unregulated and you have regulated asset merge, so what is their trading style recommended for that?
So when you're talking about unregulated and regulated, I want to clarify something for your audience, right? Is that in the traditional markets, the exchanges are regulated. Like TradeStation, like we normally use TradeStation or Interactive Brokers or TD Ameritrade, Thinkorswim platform. Those exchanges are regulated, and in the cryptocurrency space, there was no regulated exchange. Maybe I think Coinbase was regulated, but when we say regulated, they did their best to try to follow, meet, you know, federal guidelines and financial guidelines, right? But keep in mind that this is such a new industry that nobody knows how to set the regulations for it, because the products that we're trading, the majority of the products or the cryptocurrencies that we're trading are not securities. So how do you regulate these tokens? Imagine that we are trading Chuck E. Cheese tokens or baseball cards. How do you regulate an exchange that trades those products, right? So the SEC is now looking at some of these products that are being traded, some of these cryptocurrencies, to determine which ones are securities and which ones are just utility tokens, right? So that's something that is coming in. Now, when you say about these Bitcoin futures that's coming out, I think that the Bitcoin futures need to be traded similar to how oil futures or S&P futures are traded as far as the risk management goes. But as far as the profit-taking side goes, right, I would suggest using multiple contracts. Like I would not trade Bitcoin futures with just one contract. I would trade, and the absolute minimum, I would trade it with at least 2 contracts, right? That way, when the price goes up, I can take one contract off, and because it's extremely, the price is so volatile in Bitcoin that if you go up, and let's just say you make the price goes from $15,000 to $20,000, and if you don't take some type of profit off, emotionally you're gonna beat yourself up for it if it goes back down to $15,000 the next day, So having multiple contracts allows us the ability as traders to control our emotions and be able to capture that big winner. If you guys have known me for a while, you guys know, I mean, if you're one of the traders that I used to coach in the traditional trading world, you always hear me say two things. You know, there's two things that makes you a trader. One is, do you know how to size your positions or your contracts or your shares correctly? And number two is, do you have a method to capture big winners and manage your emotions when the trade goes in your favor? So
Right.
I would say that when someone attempts to try to trade the Bitcoin futures, I would say that make sure that you use multiple contracts. I personally, if I was doing it, I would use at least 3 contracts. I would not use any less than that, because the prices are so volatile that the minute it pops up in your favor, you need to be able to unload one contract, pocket that profit, and then let the other 2 run. And then when another one runs up, I would take off another one and let the last one run for as far as it can, because I've already locked in my profits.
What about you, Eric? Are you interested in trading the cryptocurrency futures? Is that something you're already doing or looking into?
I am not. I have a mixed emotion about it. I think they're really good for exposure. I think they're really good for bringing people and attention to the markets that otherwise they wouldn't have access to it. But if I'm already trading the underlying derivative, so what do I need? What do I need to go to a traditional market for to trade something that's highly regulated when I can actually take ownership of the Bitcoins themselves? So for me, I have a preference towards just trading the underlying derivative versus going to a market. And but then again, I mean, I don't have a futures trading account, so there's something else that I would have to do. So
yeah, so
like
yeah,
some people want to hedge their cash, their spot Bitcoin position.
I'm all for it.
Yeah, selling futures.
So yeah, so I want to bring that up. I want to add to what Eric just said there, which he brings up a good point, right? So in the gold market, in the silver and the oil market, right, you can trade the underlying product itself. Like you can actually go and buy ounces of gold from the dealers and then wait for the price to go up and then sell it, right? But the problem with that is that it's very difficult to go, and it's easy to go and buy like 1 or 2 or 5 or 10 ounces of gold. But if you had to buy $1 million worth of gold, you'd have to go there with a truck and then a forklift or something to carry all that gold home and then wait for a few weeks. And when the price of gold goes up, you load it up on the truck, pickup truck again, drive it down to the dealership and unload your gold, and weigh it out and stuff. That's a very inefficient process to buy and sell gold. So they have what's called paper. You trade gold contracts, and there's the nickname for it is paper gold, right, or paper silver. So instead of trading the real physical metal, you're actually trading a piece of paper that represents the metal, right? So I agree with what Eric is saying there, that I would prefer, like in gold and metal, gold and silver, the precious metals, you really can't do that over the internet. I can't send you an ounce of gold over the internet. That's why we're forced to have to use the paper contracts of it, right? But in Bitcoin, because it's a digital asset, I can send you that 1 Bitcoin, or you can send it back to me. I can buy it from you. You can sell to me. I can sell to you. So I don't see, if you know how, now let me put in this caveat, if you know how to buy and sell the Bitcoins on the exchanges, on the cryptocurrency exchanges, I don't see the benefit of using Bitcoin futures, all right? If you want to trade it directly, okay? Now, if you wanted to use it for hedging purposes, then yes, I do agree that there are a time to use Bitcoin futures for hedging, right? But I don't see the point. If you just want to trade it directly, especially if you're doing a short term or swing trade or something like that, I don't see the point in using the futures, because it takes longer for the futures contracts to settle, to clear and settle, versus the Bitcoin itself, the actual product itself, the actual digital product itself, right? Now, you brought up a good point there, JB, where you said that people can use the Bitcoin futures contracts to hedge their portfolio. So for example, right, when Bitcoin was running up to $20,000, when it was almost getting near $20,000, we all know as traders that that's a huge resistance area. Psychologically, $20,000, first time it's ever been there, and it's already, the charts look like this as a vertical already. So, us as traders, we know that, based on just the momentum, there's going to be people that want to take profits, short-term profits, right? So there's going to be lots of selling near $20,000. But let's just say that if I was a long-term holder, right? In the world of cryptocurrency trading, they don't call it holding, they call it hodling, because a guy in one of the forums said that he was hodling his Bitcoins, for a few years, and somebody said, "Hey man, you misspelled holding," and he goes, "No, I didn't, because hodling is like I'm putting a death grip on these Bitcoins. I ain't letting go of them." So it's stuck ever since then, So now whenever you hear somebody say,
hold on for dear life.
Yeah, you hold on to it for dear life. You're not just holding on, but you're holding on for dear life as it skyrockets to the moon, right? So that's why whenever you see, when your audience sees the term hodling, right, it's not a misspelled word for holding. It's a crypto term that means you're going to hold on to with a death grip, And so let's just say that I'm hodling my Bitcoins until 2020. That's like a common theme in Bitcoins. I'm going to hold this until 2020, right? So if I know that my plan is to hold the Bitcoins until 2020 for the long term, and I don't care what happens in the short term, right? But emotionally, it's not going to be easy. It's easy to say, and this is how you guys know when somebody's a real trader or a bullshit trader. The bullshit trader will tell you, just hold on to it. It's no big deal. And they never talk about what the emotion is, right? You know, if you have like $10 million going to $20,000 price point, and then it pulls back to $15,000, that's a $2.5 million drawdown. You can't tell me that you're just gonna sit there and hold on to that shit. That's a bunch of bullshit, right? So what the Bitcoin futures allows us to do is this: it allows us that when I'm hodling it until 2020, right? When it goes to $20,000, and technically you and I, we all know as a team that that's gonna be a huge, massive resistance area that everybody's gonna be selling at, right? Well, I can sit through that by jumping into the futures market, like on Interactive Brokers or any major futures platform, and short the hell out of the Bitcoin futures. And what that's going to happen is that my Bitcoins are here, right? I'm going to short the futures here, but as my underlying my real Bitcoin, let's just call it the real Bitcoins. My real Bitcoins are dropping from 20,000 down to 20,000 over here, right? I'm shorting the Bitcoin futures over here from 20,000, and as it falls down to 15,000, I lost 5,000 here, but I gained 5,000 over here. So that's a hedging strategy, and that's not to make money. It's just to hold my position at $20,000 value.
Right.
Okay.
Yeah, to offset some of that paper loss, and like you said, your emotions, and keeps you actively involved in the market as well. Keeps your skills as a trader sharp too.
Yeah, like some of the clients that we are working with, right? They're managing 5, 10, 15, $20 million portfolios, and you can't tell somebody that's sitting there with a $20 million portfolio that, hey, just hold on tight, buddy. Hold on until 2020, and there's a 50% drop. If you haven't sat through a $10 million pullback, you don't know what the hell shut the hell up. Don't tell me that that's easy to hold on to. So
no, you got to hedge large positions for sure.
Yeah. So
I know that I've read that you have some people that prefer the futures as well because they don't feel like setting up wallets. They don't feel like having to protect their private keys and just learning the new technology and learning the new platforms, and they're just kind of stuck in an old system. So what do you say to people who are kind of being stubborn and resisting, like you said, this new revolution of currency?
I don't see anything wrong with that because realistically, we've seen lots and lots of people get hacked. We've seen lots and lots of people get hacked, right? And what happens is if you are not computer savvy and you're concerned about computer security, because keep in mind that Bitcoin and all the 1,300 cryptocurrencies out there, they are a digital asset. It's the first time in human history that we have taken a digital electronic product and made it have value, okay? Just like we took metal out of the ground, polish it up, heat it up, melt it down, polish it, and we call it gold, and we give it value, right? Now we have found an ability, a way to make these digital zeros and ones, right, scarce and have value to it, and because of that, right, we're able to keep value to it, and people can reach out from China, from Russia, from Africa, and steal those digital assets, what we call blockchain or digital assets, from your computer. And there are some people that just, they might be good traders, but they're not you and I know, JB, some of the old cats that, we used to trade with. Some of those guys, they're good traders, right? They came from the pits, they came from the CME, and they're able to, give all the hand signals and everything and trade and make money. But the reality is, do they actually are good with computers security? And for those guys, if they don't want to deal with computer security, they can trade the Bitcoin futures, which is a lot more secure because now the exchange is handling the security and not you, and they are insured.
Right. Was that an easy transition for you, Eric? Just going through the security measures of this type of currency?
Yeah, I found it quite easy. I'm not a extremely tech savvy guy, but I can manage Excel spreadsheet, all the stuff that I meet people that have a lot of anxiety if you mention Excel or Word or things like that.
Yeah, that's
I
true.
never had really any aversion to it. Really, at the end of the day, if you need to learn something, there's for stuff like that, there's tons of content on YouTube where you can just say, how do I do X, Y, Z? And it's there. So with the beginning days of crypto, for me with Bitcoin, it wasn't as user friendly. The user interfaces were not as clear cut and dry. The basics of just having some security measures in place were there, and then having to build on those. It was very hard to set up new wallets for me because I wasn't a programmer. It was very hard to set up. Once you do one or two of them, then they become repetitious and very easy. Nowadays, they're all fairly simple, but there's some stuff that comes out where they say, "Oh, it's easy. Just pull up the command prompt on your computer, semicolon / and command to just type this in." And they give you a bunch of code, and that to me is not user friendly. That's not easy. There's too much friction between actually just being able to do something and having it adopted by people. So they have these apps like Venmo and PayPal and things like that. You go on there, you stick a credit card through it, and then you can just That's simple for people. That's easy for people. And the companies that are using that that level of user interface with the people, I think that they're going to have the biggest ease of adoption. They're eliminating all that friction and also eliminating all the fears that go along with it.
That's a good point. So maybe people that tried to start trading Bitcoin or other currencies years ago and it wasn't as user friendly, maybe they gave up. They said, "Oh, I can't do it. I tried." They should try again because, like you said, things have changed and these platforms have evolved.
Most definitely.
Yeah. So Ty, I meant to ask you, as far as trading like the Bitcoin futures, some people just want to clarify. So when you're in that short, you still trade it like a traditional futures trade. You have your stop in, right? The same way you would any other futures trade.
Yeah. So if you're trading Bitcoin futures, you need to use your stops that you normally use to manage your S&P 500 futures or your gold futures or anything like that you're trading. You want to use the appropriate stop size, based on your trading plan. When you're trading in the cryptocurrency world, the stop losses are a lot different. First of all, most exchanges do not have stop losses, right? So that was another minefield that I had to go through to figure out how to put stop losses in a system that does not have stop losses, right? So this is where my experience in position sizing, and if anybody knows me from when I used to coach them in traditional trading and stuff, you guys always hear me say that the #1 skill that you have to become a trader is proper position sizing. #2 skill is a method to capture big winners when it's going your way, right? So those are the two things. And so your position sizing in big trading cryptocurrencies is actually your stop loss. And I'll give you an example. If you're trading a $100,000 portfolio in the futures market, your stop loss would typically be around between $500 to $1,000, which is about 0.5% to 1%. And when you jump into the cryptocurrency world, the position size that you use for your trading is also between 0.5% to 1%. I typically use I'm an experienced trader, so I use 1% to 2%. but I don't recommend that with anyone that's not a trained, that is an educated trader. If you're not educated, you need to take a lot less risk than I do.
Okay. All right. Sounds good. How long do you think that this Bitcoin, we would call it craziness, is going to last? Just crypto craziness is going to last? Is it going to kind of plateau off once the excitement and the philosophy has gotten caught on, and it's not in the news as much? How do you think it's going to level out, if at all? Or do you think we're still super new and it's going to keep going up?
Mind if I start this one off, Ty?
Yeah, can someone mute their mic?
That's not me.
Is that you? Okay.
Okay, there you go. So let me kick this one off. As far as what we think is going to happen, or what I think is going to happen, like Ty says, I think there's a good 2.5 to 5 year run as far as the crazy bull market, all the crypto craze. I don't know what the kids are calling it these days, but the thing that I believe is going to happen is that the cream is going to rise to the top. So we're going to have a set of, like right now, we're seeing a slew of different use cases come into the market. Different projects are trying to have ICOs. They're trying to have initial coin offerings and offer these tokens. And they're trying to raise a bunch of money. And there's a lot of these projects that are not needing the money, or they need the money, but they don't need to use a crypto. And they're not using the crypto technology to solve a real world problem that needs crypto technology to solve it. They can actually just build something with normal money, or with the systems that we already have in place in the world. They just have to build a company around it. So I think all of those are going to have their run too, and those will slowly kind of die off. And we're building a foundation now. Most of the companies that have the highest prospects are the ones that have these foundational use cases, these structures that other things in the future can build off of. So right now, we're just now starting to see a handful of things where it's like, oh, we have like this social media company. Oh, we have this. But when you had Ethereum, it was just so all of the developers could actually build all those things, right? So it's setting the structure and the framework so that way the next generation of developers, so to speak, can build on top of that. So I think that we're going to have the cream rises to the top scenario. We're going to have a lot of the stuff that wasn't really important go to the side. I don't think that the technology is going to go away. It's not like, oh my God, cryptocurrency stuff is here and then it's going to be gone. It's not going to be like boom and complete bust, something like that. I mean, there's going to be lots of ups and downs, but I believe wholeheartedly that the technology is not going to go away. It's here. It's just a matter of which use cases are going to be the most widespread and adoptable, which ones are going to have the least amount of friction, which ones are going to be implemented in the most scenarios. And there's going to be a lot of foundational work that's still coming before we see the major use cases or the end user cases. And there's so much variety that we're going to see. So that's my prognosis. And I think that bull run for most of that's going to be in the next 3 to 5 years. And then we'll see it kind of level out, but the technology is not going away. So I don't see it being as a bad investment.
I agree. What do you think, Ty?
Can you repeat the question again?
Sure. What do you think about people calling it, crypto?
Oh, yeah, the boom.
The bull run, and what's going to level out, like Eric was talking about, that some companies are going to fizzle out.
Usually, whenever I listen to anybody, like I said, and this might be a little bit abrasive and a little bit harsh, right? But usually I don't really pay attention to anybody that talks about crypto or how long it's been doing it, unless they've been in it for a while. So I always ask them, hey, how long have you been in crypto, right? And if they say they've been in crypto for 3-4 years, and then they've had enough time to really experience and learn about crypto and blockchains. And then the next question I ask is, it doesn't take me but about 5 minutes to talk to someone to see what level they're at. And if I find out that they haven't, they're not like a multi-millionaire yet, I usually just pass it up. I really don't pay them any attention. It's just like you trade futures, you trade, you and your husband have traded hundreds and hundreds and hundreds of futures contracts already. I mean, would you pay attention to someone that has only traded one gold futures contract or one oil futures contract, and they tell you, hey, I think that oil is going to do this or gold's going to do this, their weight, you just really don't carry that much weight, and I hate to say this, I hate to put Eric on the spot here, but it's just like he and I both love to study martial arts, right? Now, Eric is a professional fighter. Eric you see the ears, man? Show me your ears, bro.
I don't know if you're going to get them from
man. He's got a black belt in jiu-jitsu. Eric's got a black belt in jiu-jitsu. I forget under who his master or his instructor or the sensei or the professor is, right? He always gets mad when I say sensei, by the way. So, who his professor is, right? But because, I'm not in that world, I don't like rolling around with guys, once they roll around with me, they put their butt in my face, they won the fight, man. You ain't got to choke me out of nothing, man. It's, okay. But, he and I both grew up studying martial arts, and he went and studied MMA while I studied Wing Chun and all this other stuff, right? And Tai Chi and stuff. And I always tell him stuff in theory about fighting, and then, Eric would always be like, okay, let me see what you're going to do when I'm trying to punch you in the nose like this and see if that still works, right? And so it's like, people talk, stuff about cryptocurrency trading or investing or how long the boom is going to last and stuff. But it comes down to like the martial arts that, that Eric and I have been studying, I can say all this stuff, but when he punches me in the face with his fist, and I don't know what to do, and it lands on my nose, it's gonna hurt. It hurts, And then when I go to punch him and he gets out of the way, right, and it doesn't hurt him, right, I'm gonna listen to the guys that every time I try to, I've practiced with Eric before when we, in the past in martial arts, and I've tried to throw 100 punches at his face and it never even touches his nose once, right? So those are the guys that you want to listen to when you want to learn how to block your face from getting punched by somebody else. And it's the same thing in trading. When somebody tells you about trading or how long the boom is going to last, is it coming from a credible source, or is it coming from a bunch of theorists? And one of the things that that people respect about our channel is that we're not a bunch of bullshitters. Like we eat, walk, and talk crypto and blockchains, and we can back it up. We can back it up what we say. You know what I'm saying? And so, in my opinion, as a trader who's been in the crypto space and trading for over 4 years now, I would say that we have about a good 3 to 5 years. 3 to 5 years, starting in like 2017. Now. Leon believes, our senior fundamental analyst on our team, he believes that 3 to 5 year period started back in 2014, 2015-ish, right? So if you add 5 years to 2015, that means that, hey, we still got another 2 to 3 years to go, right? Okay. If you count it starting, the 3 to 5 year run is starting from this year in 2017, right? Then, we still got another 3 to 4 years to go. So either way, we still got plenty of time. And I've seen several people, turn, $10, $15, $20,000 into $1 million, and I've worked with several people, I've worked with several clients that have done that. So it's not impossible.
Okay. And so speaking of going from talk to action, how soon are you going to see Bitcoin and other cryptocurrencies play out and change everyday life? The transactions per second that Bitcoin has made, people using it to actually buy things and purchase things and make, consumer transactions is way lower compared to like Visa and things like that, of course. So how long until that kind of catches up where we're using cryptocurrency on everyday practical, use for things for buying?
Right now, the challenge with Bitcoin is that we have a civil war going on in Bitcoin. Okay, there's two groups of people, two parties, and this is more outside of trading or investing here. But this is more of a political issue with the cryptocurrency space and mainly with Bitcoin, because there's two groups of people that are fighting over who has control. Who gets the ability to update the Bitcoin software, because Bitcoin is nothing but software and it has to be updated by somebody, right? Or some group of people. And right now, the main group of people that are updating it is a company called Blockstream. Okay, and when we say that, most of the people that's writing the software engineers, right? Now, I'm not here to say whether the guys that are from Blockstream that's currently upgrading the software is better or worse than the other team, and we'll call the other team the miners, okay, or the Bitcoin Cash team, right? So you have two types of Bitcoin. One is Bitcoin Cash and one is Bitcoin Core, right? The one that's worth about like $15,000 right now is Bitcoin Core. The other one that's $2,500 or $3,000 is Bitcoin Cash, right? So there's a split, there's a civil war. The parties and the groups of people that are responsible for updating the Bitcoin Cash software are fighting to control the Bitcoin network, and the people that are updating the Bitcoin Core software are fighting to make their software the best, right? So there's a civil war going on. So neither side hates each other. If you talk about Bitcoin Core, then the people from Bitcoin Cash is going to hate you. And then if you talk about Bitcoin Cash, the people from Bitcoin Core is going to try to slam you. And even if you were just neutral, even if you're just a neutral person, you're just trying to learn that if you even just mention one, the other side will dislike you, and vice versa. So, and that's what's going on right now. And what that has done is that it has caused both sides to try to knock the other side down, right? We're talking about billions of dollars in this network, right? So they're fighting over the control of it. And because of that, right, we have a situation where the networks are being clogged up and it's being jammed up, and people are not using it as an electronic cash like it was intended.
Right.
Right. So that's the problem that we're having right now. And so like our business, we used to accept Bitcoin cores as payment. But right now, we prefer, we're a cryptocurrency company, so we accept any cryptocurrency, I mean, if you want to pay us in Dogecoin, we'll accept it, right? And Dogecoin is a joke. Everybody knows it's a joke. But because we believe in cryptocurrencies, we accept it because it's a cryptocurrency. So, we're not like one of those fake companies out there that say, oh, we're a cryptocurrency company, but when you pay us, we want it in US dollars. Or we want it in Bitcoin only. Or we want it in Ethereum only. Like, screw that. You're a cryptocurrency company, accept it. Right? Now, obviously, we prefer to accept the ones that are more liquid so that we can move it around, without disrupting the price. So, but that's, just a little quick history. That's what's going on right now. My hopes are that one side just completely overwhelms the other side so that it becomes an actual electronic cash. I don't care which one wins, just one of them win. So that we can actually have a payment system right now, because right now we don't have a payment and an electronic cash system like it was intended, despite what some of the I wouldn't say knuckleheads, but some of the ones that are saying that it is, but it isn't.
What do you think about that, Eric? Do you have an opinion on that?
What's the question was? What do I see?
How do you see Bitcoin or cryptocurrency just becoming more of a practical, everyday tool for people, as its original, intention, just to make transactions peer-to-peer and just to continue on carrying on, our lives? Okay,
so yeah, outside of the endless different use cases for different kinds of cryptocurrencies, I believe that the peer-to-peer transaction and being able to just me and you send value between each other, I think that's the most fundamental, most basic, uncensored thing that it offers. So I think that is going to be the biggest use case. Now, whoever can eliminate the most amount of friction. Now, as Ty was discussing with the civil war that's going on within Bitcoin right now, it's causing everyone to suffer with a little bit longer transaction times, with a little bit higher transaction fees. All of those things are going to prevent us from using it to its maximum potential.
And I just want to add this: when he says a little bit higher transaction fees, right? I want to say that, when I first got into Bitcoin back in 2013, 2014, the transactions were like, I mean, they were lightning fast. Okay, and the fees the cost of a transaction was near zero. Like we saw somebody like there was an article in CoinDesk, I think it was, where somebody transferred $150 million worth of value across the Bitcoin network, and they paid like 5 cents for the transfer. Recently I had to make some transfers for business reasons, right? And the transaction cost $88 to $104.
Right.
Right. So that right there, when the transaction fees are that high, that just eliminated it from becoming a transactional electronic cash anymore. Because why would I send something and pay $88 or $100 for it when I can do it with a wire transfer and have it done for $25?
Right, because that's one of the benefits of eliminating a middleman system is to lower those fees and costs. People pay through PayPal and different methods, and that always take fees or a percentage. And if Bitcoin's doing the same thing, it's kind of disappointing. So what about the privacy issues? Do you see the privacy issues being solved still? Is that original intention of keeping our privacy and having the currency encrypted? Is that still fulfilling its purpose, or is it getting better?
Right now, Bitcoin is what's called pseudonymous, meaning that it is you can see the transactions, you can see the quantity of the transaction, where it's coming from, where it's going, and the timestamps for them when it occurred and things like that. You just don't know who the person behind that account number is, because a Bitcoin account number is yay long and it consists of a bunch of numbers and characters and letters, right? So we don't know who it is unless they identify who they are, right? So it's not anonymous, which means that 100% you don't know who it is. They're just pseudonymous. You just don't know. It's just basically using a nickname for your account number, right? And that's made up of numbers and letters of the alphabet. And I think that privacy is a huge issue. It's extremely important for the cryptocurrency space, and it's one of the biggest use cases for having a cryptocurrency is that you can maintain your privacy. And the reason why that is because out of all the human rights that we have, JB, if we get detained, if my rights are being violated and I get detained by a law enforcement officer or a government official, you can clearly see that I'm being handcuffed and put into a police car and put in jail or put in a cage or something, right? Or let's say that I'm being censored. They block my YouTube video. They cut off this video stream that we're broadcasting on right now, things like that. But what happens is whenever we get our privacy is being violated, it's being violated by technology. So someone can easily, the government can turn on this camera remotely, right? And listen and hear what we're saying. They can intrude and violate and put a bug on this broadcast right here and listen to what we're saying and things like that, if it was private. And so when our privacy is being violated, it's being done with technology, and the majority of the human population cannot tell when their privacy rights are being violated. So one of the things on our team that we really have a big bias, out of all the 1,300 cryptocurrencies, we have a huge bias towards the privacy focused cryptocurrencies, because by using technology to invade our privacy, blockchain technology has now allowed us the ability to use technology to fight that technology that was eavesdropping on us,
right?
That was spying on us, right? So when you use a privacy coin such as Monero or Zcash or Particle or Pivx or any of these privacy coins, right? It allows us to mask the transactions and obfuscate it. Meaning obfuscate just simply means that you make it so that there's no way that you can prove that it's 100%. Right? There's no way to prove 100% that this transaction came from me and it went to Eric, right? So by hiding that, we protect our privacy by using this technology. And because it's private, regardless if we want someone to eavesdrop and spy on us while we are making those financial transactions, it won't matter because the system is default to be 100% private, whereas Bitcoin is not 100% private right now, right? So we have a situation like just a few days ago, the developers of the Z Classic privacy coin, they announced that they were going to airdrop into the Bitcoin network, meaning that anyone who, if you own 5 Bitcoins in your account, they're going to airdrop out of the sky, right, 5 Bitcoin private tokens into your account. So that's what they promised, and that's why the price of Z Classic shot up. And I want to send a shout out to our team member, the Honorable Grandmaster, legendary, world-renowned LeonFu.com, because he notified our client, our private client program where we're coaching our clients privately, and he tweeted out to them and let them know that, hey, there's a good opportunity here, when it was like, I think around $16, right? And then now I think it's I think the last time I checked it was over $100. So wow. Right there, and that just happened in less than, like, I would say, what, Eric, like 2 or 3 days?
Yeah, 2 days.
Yeah, so you made a few X off of that, off that, analysis from the Honorable Grandmaster LeonFu.com, and I think I made like
my own accord. If I took action on my own accord.
Yeah, yeah, he's not giving financial advice or anything. He's just sharing us what he analyzed and what he saw, and I'm one of those people. I am one of those people that if you do something better than me, I'm going to follow what you do. You know what I'm saying? So that's me. So we all made a few X off of that, in just a couple of days, and that just comes to show you right there, JB. For your audience, is that the potential in it can be very huge.
Right, I agree. Just be in it. Be surrounded with other like-minded people, traders, investors, so that you can get that information and you can be networking and talk to, get involved, get on your website and join your Twitter and, just be involved in the conversation. And you just never know what jewel will be dropped in your lap. And so last question, guys, for you starting off, Eric, what would be like your top 3 tips for someone just starting out in cryptocurrency or even trading Bitcoin futures? Because I know that, the CME said that as Bitcoin futures starts to increase in volume and, that plays out well nicely, there's other altcoins, futures contracts on other coins, in the talks. So that door will be beginning to open up and even wider. So what are some top 3 tips people wanting to get involved in trading to start?
So top 3 tips I would have are to, number 1 is just security. I mean, have a password manager, have something that you're not using a Word document or a text document to save passwords and stuff like that on. That's just silly. We live in a digital age where there's a lot of things that can help us to be safer. And if you use a password manager, then that's going to make everything you do online safer, not just crypto. So my first tip would just be a password manager. The second thing would be just get started. Go get an account with some exchange. Get started somewhere, and you don't have to throw in $1,000, $5,000, or $10,000. You can get started with $100. But guess what? If you put $50 in or $100 in, you're automatically emotionally invested in learning. You're instantly emotionally motivated to, you know what? Now I need to figure out how to send a transaction. Now I need to figure out how to get a wallet. And that emotional connection is pivotal, because I don't know about you, but I've met people who tell me about how great of a trader they were because they were paper trading. They've never actually done real trades.
Made 10 million bucks paper trading.
Yeah, and I'm like, okay, in the real markets, they're like, no, it was just, paper trades or a simulator account or something like that. When the emotional connection is not there, it's not the same. So to me, just getting something, getting the foot in the door, getting anything to take the first step and actually take action is going to create that emotional connection, and it's going to give you that drive to simply, take the next step after that. Okay, well, I need to do this. Okay, I need to do this. So you're never going to do anything if you don't take one step and then another step and then another step. So I think this is like anything else. There is so much potential to be had during this bull market. Even if you make a bunch of mistakes, if you're doing what Ty is saying with managing your position sizing and not throwing everything at one thing, then you cannot afford to not take the risk. The cost of missing out, we've found out multiple times, the cost of missing out is considerably greater than the cost of being wrong.
Yeah, and let's just give a few examples here in numbers so that people understand it, right? So the Honorable Grandmaster, legendary, world-renowned LeonFu.com, he told us to get into, he didn't tell us, but, he said he did his analysis and he said that, Decred, let's go back in history here. Let's go back, let's start with Stratus. He said, hey, the analysis here, is that, this is a good team. It's unknown, but if they can pull it off, there's a huge potential there. And I could have put the money in. I could have put money into Stratus during the original crowd sale, and $5,000 back then would have turned into way over $1 million in less than a year later, right? So like right around less than a year later, it would have been over $1 million. And then, so I missed that. So that cost me $1 million to miss that. And could I have put in $5,000 at that time? Absolutely. There's a lot of things I could have done to come up with $5,000, but I was just being a knucklehead and goofball and didn't take action, right? So I just sat on my ass, and you know what the average profit potential of sitting on your ass is? 0. 0%. The people always ask me at the time, hey, what kind of profits can I expect, when I get into cryptocurrencies? Well, I cannot guarantee you how much money you're gonna make, but I guarantee you this: you ain't gonna make jack shit if you ain't gonna do nothing, right? If you're not in the game, right, you ain't gonna do nothing. You ain't gonna make nothing. The absolute, you are guaranteed to make nothing doing nothing.
You'll lose money. You'll be sitting and watching TV, eating chips, and ordering pizza and spending money. Yeah, and the other another example is that we had an opportunity. Leon did an analysis, and I agreed with it earlier this year about Decred when it was only like 50 cents, 60 cents, right? In January, and it ran up to almost $100 by the end of the year. So that's like a 200x return. So you do the math. If you put in $5,000 into Decred at the beginning of the year, right, it would have grown to almost $1 million or more by the end of the year. And then there's nothing that regular citizens or human beings can do to get access to those kind of returns. Right.
And this is not something I made up. I mean, you can go look at the Stratus chart. You can go look at the Decred price charts, and then same thing. Our team did an analysis of Cardano just like I think in November or October, something like that, and that made a 25x. So you could have been wrong the whole year. You could have made a new trade, take a trade every month, right, since the beginning of the year, and then be wrong in all of them, and all you had to do was just hit Cardano or Decred or the Verge that I mentioned on our channel, and any one of those, Cardano grew like 25x, Decred grew almost 200x, and then Verge grew to over 90x.
Now, all that's under the assumption that you're following your good risk management by keeping your position sizing responsible.
And keep in mind, I throw those numbers out there just to, let you know what the market does. That doesn't mean you're going to capture it, right? That doesn't mean your listeners are going to capture it. It means that if you are educated on what to do during those times, you have an opportunity to capture a chunk of that. How would you like to be able to capture just 20x out of that 200x?
You don't need the whole pie, just a bite.
Yeah, just, here's the thing. The pie is so big in crypto, you don't have to, there's no way that all of us can eat the whole pie. Everybody come by and just grab a bite. Everybody come by and just grab a bite. That's all you need, right? So, like I said, $4 billion just came into this space in 2017. So there's a lot of, potential out there. It's up to people to get off their butts and go do something about it and not just think about it, right? So you asked earlier, I just wanted to add that to what Eric said. You said, hey, three tips for the people that are new. The first tip is that if I was a beginner right now, I would be scared shitless about losing this stuff. So the first thing that I would do is that I would only look at projects that cryptocurrencies that I can store on a hardware wallet, like a Ledger Nano S or a Trezor. And for more information about that, go to our website at www.cryptocurrency.market. Click on the FAQ button and go down to number 2, and we answer all the questions that we get all the time about what exchanges are safe to use, what wallets are safe to use. We cannot guarantee any of these exchanges or wallets are going to be safe, but those are the ones that we have used in the past, right? And every one of them that we have mentioned, we probably have ran $1 million through it to make sure that it worked. So because of that, we are comfortable in sharing that with somebody else on why we use those, okay? And just so you guys know, the list of exchanges, wallet services, and softwares and everything that we put on there, right? We were not paid to recommend any of them, okay? With the exception of the Exodus wallet, our team is invested into their company, not the wallet, but their company that builds the Exodus wallet. So that's full disclosure, right? It's still the best wallet I've ever seen, desktop wallet I've ever seen on the market, hands down. Somebody else knows a better one, let me know and I'll talk about it, okay? So I'm not just talking about it because our team members are invested into their company. We're talking about it because it is the best desktop wallet on the market, okay? And make sure you guys use the hyperlinks, the addresses that we put on there for security reasons, because there's a lot of scammers out there that put up fake addresses and they're not real. You click on it, you go there and you lose all your money. So make sure you use the ones that we put on the website, okay? That's the first tip, is use hardware wallets. The second tip that I would say to people is, I know that Eric already said this again, but it's so important. Get started.
Yeah.
Like, get started. Stop sitting on your butt and listen. If you've been watching us for more than 6 months or more than 3 months and you ain't bought $1 worth of cryptocurrencies yet, pound that unsubscribe button. We're here to make life-changing money, and you ain't going to make life-changing money sitting on your butt doing nothing. The average result of doing nothing is 0% profits, okay?
With zero power comes zero responsibility.
Okay, so I would say this. If I had to do it right now, right, if it was my little brother or my little sister or something and I was trying to get them into crypto, I would get them to take out $100 and go get $10 of this crypto, that crypto, and just move it around just so you can see what's going on, see what all the excitement and all the buzz is about, right? Stop talking about it, stop reading about it, go and get it and transfer the tokens back and forth, okay? Even if you start with like Dogecoin, one of the cheapest coins out there, right? You can get 100 or 200 Dogecoins with just a couple bucks, right? And just move it around so you can see why it has value, okay? And then that's the second one, is just get started. I can't say that emphasize enough. You know what? I wish there was a way that we don't let people follow our channel unless they show they own one Dogecoin or one token of something, right?
That's the cost of admission for future live broadcasts.
Yeah, we should do that, because people shouldn't be watching us and just going home and then go watch football or something. Get off your butt and go do something, right? You know what? I had a couple of guys, and I mentioned this on the Bitcoin Meister show today, and I'll repeat it again. I remember, right, a place that I used to work at. I'm not going to say where or who, but if you're listening, you know damn well who you are. You know damn well who I'm talking about if you're listening to this, and I know you are, okay? I know you're always, sneaking up, watching my videos, all right? If you can afford to smoke a joint every day for a whole year, right, do not tell me you have no money to put into crypto. Do not ever tell me that, because I'll smack the crap out of you, okay? If you can sit there, oh, man, I ain't got no money, man. Dude.
You got the good stuff, huh?
Yeah, like, dude, I got no money to invest in crypto, man. I don't know how you do it, man. You got lucky. What? I was working with these guys that was smoking weed every day. I had a wife and 2 kids. I had to work almost 2 jobs to pay for everything, right? And they're smoking a joint every day. They're late on their cable. You know what? I saw a guy that was paying $200 a month for his cable bill.
Yeah.
And I grabbed him and I go, what the frickin' are you thinking about, paying $200 a month to watch TV? And then now, you know, he's telling me that, oh man, I don't have enough money to invest in crypto. Well, I said, what are you, stupid? You know, I mean, I know I'm getting emotional here. Let me just drink some fresh squeezed orange juice. Let me relax here a little bit.
It's true. People, you know, still playing the old lotto game or heading down to the casino and doing the slots. So if you look at your budget, and if you really want to do this and you say, I have no money, really sit down, look at your budget and see where you can cut off and see where it's worth, you know, not missing this opportunity. Because it's, you know, reminds me of the internet. It's reminding me of the internet, you know, boom when it was first coming out. And I mean, it really changed the world. So you never know if you're actually living through another one of those. And so just kind of wake up, do something.
You know, instead of being addicted to ESPN sports where you don't make no money, instead of being, you know, people out there will know the stats for Kobe Bryant. They know, like, you know, when the college Sweet 16 tournaments go off. I can't believe sometimes I go into the sports bars, you know, for a burger, and Eric and I would go in there and we would listen to guys talk. They know the first name, the last name, and the middle name of every player on the team. They know the first name, the last name, the middle name, and the kids' names of every, you know, coach. Everybody's on the front row bench. They can go through everybody that's sitting on the front row at courtside seats and go, oh, that's so-and-so. That's Denzel Washington. That's Samuel L. Jackson. That's Kim Kardashian. That's so-and-so. That's so. And I'm like, you know, Eric and I are always looking at each other baffled. Like, what the hell are you doing living somebody else's life for? You know, why not live your own life? Knowing who those people are ain't going to make you a freaking penny, and it's going to cost you more money to watch it in time and money, right? Take that $50, $100, $200 game ticket and go get you some Bitcoins with it and do something to make it change. We are living in a time, JB. This is the largest and the biggest bull market in human history. Mm-hmm. There will not be another bull market like this for traders like you and I. There will never, ever be another bull market like this in human history while we are still alive. And you know what? Eric and I are going to capitalize on it.
I would even dare to challenge people if some people are still using that model of I got to store X amount of dollars for my children's college education, and that's growing more and more expensive by the year, and they're saving up all this money for some future education. There's nothing totally wrong with that, but, like, you know, kind of reevaluate. Our culture changes, things change, financial models change, you know, so just reevaluate. Maybe if you're tucking away money for things like that, maybe you can shift it over and reallocate and maybe start some accounts for your kids, you know, in cryptocurrency. So it's just a new way of thinking.
Yeah, this is, you know, I get a little bit passionate, you know, whenever it comes to, you know, when people say that they're broke because they're busy smoking weed or drinking every day. You know, I hung out with a bunch of traders, and you probably know them, that I used to work with. And every time we were done trading or done working, at the end of the day, we'd go eat, and we would go and have dinner, and I would see them spend $50 on alcohol. Mm-hmm. And nothing, you know, against that. You know, I mean, if you want to drink alcohol, you're okay. But, you know, hey, you know what? Instead of drinking 5 beers, drink 4 beers and save money, that $5 on that other 5th beer. And by the end of the month, after 30 days, you have $150. You know, and you put it into a crypto. I mean, you put it into something like, you know, Decred at the beginning of the year, and that $150 grows 50 times, even 10 times. Now you have $1,500. Now you can take $1,500 and take that $100 each and go put it in 15 different cryptos.
Right.
Right. So there's no excuses. Like, you know, there are people that are, this is the first time in human history we have this kind of opportunity. And I believe, Eric believes, everyone on our team believes, we got a good few year run on this. And like I always believe, man, you know, like, hey, when it's hay, you make sunshine, you know, I mean, you make hay while it sunshines. Okay.
Don't be that person that if you're sitting in our audience right now, if you're watching JB's channel and you're sitting in the audience listening to this right now, don't be that person who we bump into on the street in 2, 3, 5 years time. And you say, oh, how was that? Did you take advantage of it? And you go, no, man, I had something I had to do.
Hey,
I
you
have
want?
excuses.
Hey,
Don't be that person.
you want to share that story about Braveheart and gladiators? Well, what happened when you introduced me to your friend there, Eric, in Los Angeles?
Oh, okay.
The Braveheart versus a gladiator
I
story.
remember. Is it all right if I share your kids' names?
Yeah. Go ahead.
All right. So, one of my good friends, we
Oh,
were out
just
there.
real quick too, because I know we're wrapping it up, JB. If you guys are in the audience, go ahead and put questions in the audience for me or Eric or JB, and then we'll take and answer the questions for you guys.
Yeah, he can look through them while I'm telling the story here. I'll make it quick. So we're all there, and Ty's there with his family, his wife and kids, and my buddy's all excited. He's got a son. He loves kids, and he says, your son's name is Maximus. Your daughter's name is Athena. Did you get those? Did you name them right after you watched the movie Gladiator? And we're all laughing, and Ty's like, yeah, pretty much. And then our other friend, he says, yeah, I felt the same way about the movies. Was it
Braveheart?
And Ty goes, did you name your kids after him? And he goes, no. Well, you didn't feel the same way, did you?
You know, those were my two favorite movies. You know, two of the like manly movies. You know, is Braveheart and Gladiators. And so when he said that, when I introduced him to I said my son's name was Maximus, and he goes, "Oh man, did you Gladiators?" And I was like, "You're right." And I go, "Yeah, I wanted my son to grow up with honor and integrity and courage, you know." And he goes, "Man, I felt the same way when I watched Braveheart." And I said, "Well, did you name your son William Wallace?" And he looked at me. He goes, "No." And so I looked at him and I go, I guess you didn't feel the same way then.
Yeah, that's passion. That's passion.
Yeah.
So if you guys watch this and you guys hear us and you guys feel the same way about cryptocurrencies, right? Please take action. Please take action. So we got some questions coming in. Let me see here what the questions are. Let me see here real quick. If you guys can put the city that you guys are coming from also, let me see. Somebody asked, what do you think about Verge and what wallet are you using to store it? I'm not sure about Verge here. I have no idea why it shot up. A lot of people are saying that because John McAfee, the creator of the McAfee antivirus, tweeted out, that there was a moment there where he said he was going to tweet out his favorite coins each day. And one of them, I think, was Verge. So it shot up like crazy. It went up like 80, 90x. That's the one I mentioned earlier that went up 80, 90x right there. All right. And what wallet are you using to store it? The wallet that I'm using right now is called Coinomi. So that's the one that I use. Let me see. What other questions do we have? Let me see here. Okay, when can people expect more info on the crypto tools you and your team are working on? Okay, that's a good question. Oh, and that's from Shaka Daniel from New York, right? He helped us film the Gladius interviews when we were there. So thanks a lot, Shaka. He's from that channel, Chase That Coin. It's also a trading channel, right? Matter of fact, I might have you. You might want to interview him later on when you get a chance, JB. He's out of New York, right? So we have some tools. Once your portfolio gets bigger, there's going to be a certain point where it's really difficult to manage the entire portfolio manually. One human being to manage it, right? And it becomes when I say very difficult, what I really mean is that it just takes a lot of work to manage each position. Like right now I have like 40 something positions, 40 different cryptocurrencies in my portfolio. So it's just a massive amount of work to do that. And it's sucking up a lot of time. And I'm supposed to be retired and sitting at the beach right now on a hammock and sipping fresh coconut, fresh Mexican coconuts right now. But I'm not, because I have to be busy managing my portfolio every day. So we got to a point where, about sometime earlier this year, Leon and I made a decision that, you know what, manually we're not unable to do this anymore, and it's just way too much work. So we invested a huge sum of money into building some software to help manage our portfolio. Right, it's going to roll out in several phases. The first phase is the Taifu 30 broad market indexes. So we need something like in the traditional stock market, we have the S&P 500, we have the NASDAQ 100, and we have the Dow Jones Industrial Average. So we have those three indexes so that we can gauge the pulse of the market, so that to see what the market's doing, and so we can compare and measure our portfolio performance against what the market's doing. We want to make sure that we at least perform and do what the market's doing and not underperform the markets, right? So because of that, that's going to be the first set of software tools that we are rolling out to our audience. So if you guys are listening to this, you guys got firsthand information about that. We have the beta version scheduled to be released around March, late March. So I'm hoping, I'm praying that everything comes out on schedule, because we desperately need that software to help manage our portfolios and reduce the workload. So that's the first phase. The second phase of the software is where we allow people to create their accounts on there and a portfolio, and be able to track their performance, and then be able to measure it against the indexes. And we're thinking about and that's like the basic version, and then like the premium version for our clients. We are going to do a special one, a version of it's basically like a portfolio tracker, and allows them to see what we have in our portfolio and how we manage a portfolio, so that people can, our clients can follow along. Okay, so they can see how we're not like advising what to buy or what to sell, but they can see how we are managing our portfolio and how we resize it, how we rebalance it, and how we move things around so that to protect and reduce the volatility in our portfolio. So those are things that's coming out, and we're expecting it to come out in late March is the last time I checked. This is extremely important to us to have these software tools. And we are actually, David is from Seattle, and we're actually flying him in from Seattle down to Dallas to stay here for 6 months in Dallas, just so that he can work with the software agency that's building the software tools for us, so that we can have these to use as soon as possible. And also, it's not just us, but our clients that we have been working with, right, for a while now, they need these tools as well, too, to help them manage their portfolios. So it not just makes our work easier, but it makes our clients' work easier also. And so that's the question there. Yes, somebody asked if I'm reading here on YouTube, and the answer is yes. Let me see. Zad is giving brilliant tips, much appreciated as always, but one coin you haven't mentioned is Cardano, which I really do think is the third generation of blockchains. What do you and the Grandmaster think of Cardano? So Cardano is I agree, it is a third generation blockchain. It's basically Bitcoin 3.0. The first one was Bitcoin. The first generation was Bitcoin. The second generation was like NXT and Ethereum. And then the third generation now is Cardano. And it's being built by one of the co-founders of Ethereum, named Charles Hoskinson. And he's one of the top blockchain software engineers in the world right now. And so he's building that. And we think that that's a huge, long position for us, for our team. We are biased because we like what Charles Hoskinson is doing. We have frequent contacts with him, right? And he's always available whenever we ask him about his projects. He's one of the easier to access project developers. So we always have a bias for him, and we believe that he has huge blockchain engineering talent. So we pretty much invest into whatever project that he puts out. He's had a huge track record of success. So when people have that kind of success track record, right, we are going to follow it. You have any to add to that, Eric?
No. It's when success, you have people in your life that it seems like failure and tragedy and misfortune follows them around, and bad luck goes everywhere they go. And then there's other people in your life where good things and fortune and good luck and success follows them around. Those are the people that you want to keep an eye on. Those are the things that you want to follow. You should be able to identify those things in specific companies. There's a lot of developers and CEOs and people who are working on these crypto projects. Anything that Vitalik is working on himself, Vitalik Buterin, it's probably going to be something good, right?
Yeah. So next question is more info on the crypto tools. We just explained that. What market cap should someone look for in altcoins? That's going to depend on your financial goals and what your trading strategy and objectives are. Some people, their strategy is more suited for larger cap cryptocurrencies, and then some strategies are like, for example, even on our team, Leon prefers the larger cap cryptocurrencies, and I prefer the smaller cap cryptocurrencies. So that's good. That's a personal preference. Any cryptocurrency groups in Orange County? I don't know. I don't live there yet. I'm still shopping for a house in Orange County or in North County, San Diego. So maybe when I get there, I'll find out and let you guys know, right? Excuse me. So what's your time frame on your online courses? Okay, so people have been asking us about our home study course for a while now. And the biggest, there's two things that's been holding it up, guys. The first thing is the legal. We cannot release the home study course until our lawyers approve of everything that we do and say in there, and the verbiage and the languaging and everything to make sure that we're in compliance with U.S. government regulations. So because of that, and then after that's done, we have to send it to our video editor to get it chopped up and edited and modified so that it's compliant with the government regulations, right? And then after that, we send it back. And what's been happening is that the reason why it keeps getting delayed is because of the legal review. And the other thing too is that every time we finish reviewing the legal stuff, the SEC puts out a new notice that forces us to go back in and have to change things here and there. And then we have to re-edit it and do everything. And then the third thing that's causing the delay is that, we make our full-time income, like right now, we make like 99.99% of our income from trading, right? Not from the home study courses or the boot camps. So because of that, whenever the market shoots up like crazy, we're busy trading. We're not, that's why it's taking so long to get the home study course done. So, I apologize, if it's getting delayed like this, guys, but we're trying to put out the best home study course on cryptocurrency trading and investing that our team can put out. So we don't want to put out a crappy product, okay? So sorry about the delays, guys. Did you check Chainlink? We have not looked at that yet. We'll probably look at it in 2018. Right. Greetings from Austria, Europe. Hello to you guys over there. Okay. Okay. So we get more questions about Cardano. We already answered that. What happened to NXT? I mean, I don't know what you guys are looking for there. People were buying into it, which pushed the price up. Because NXT was going to take a snapshot yesterday, and they were going to airdrop one Ignis token for every 2 NXTs, the tokens that you hold in your account. So people were buying up the NXTs in anticipation of receiving those free airdropped Ignis tokens. So that's what happened there. All right. So that's it, guys. I think that's all the questions that there is. Okay, so Ethereum Classic's looking good. I don't know what the we still haven't figured out what the cost is for the cryptocurrency course. We're still working on that, guys. And then Ethereum Classic looking good. Yes, it is. Right. We made a good call on Ethereum Classic back when it was like $1 something, and now it's at $30. So yes, it was a very good call. Right. So that's it for all the questions, JB. Thanks for having us on.
Thanks, JB.
Thanks so much, Ty. And I really appreciate your newsletter, your channel. I'm sure everyone appreciates it because you guys do a lot of work vetting out these companies and doing a lot of the research and kind of cutting to the chase and just giving everybody all this free, wonderful knowledge. So I really appreciate what you're doing and how many people you're helping. So thanks a lot. Thanks, Eric. It was good seeing you.
Thanks for having me, JB.
All right, so this will conclude the broadcast, the live broadcast, guys.